feed have joined us. So welcome to our webinar today. Our presenter is Terry Miller. He is the finance manager here at River Network and comes with a wealth of knowledge and experience on this topic. At the end of this session, there will be an evaluation form that should, in theory, pop up on your screen. And I would certainly welcome any feedback you have regarding this and potentially future webinars that River Network could provide to our partners. With that, I will turn the mic over to Terry Miller.
Thanks, Catherine. Good morning, everybody, or those of you off further east. Good lunchtime. I appreciate your being here. This is part one of a two-part series. Next Thursday, we're going to do the second half. We built it that way so that there would be plenty of time for questions and answers, and I really want you all to feel free to ask questions. There's no such thing as a stupid question, and if there's something you're wondering about, I promise you someone else is too. And in fact, I think it's nice if people can hear each other frame their questions. So I'll keep my eye. I'll periodically say, does anybody have any questions? And you can just speak up. Occasionally, if there's a bunch of noise in your background, you'll find that keeping your phone muted with *6 helps the quality of the call, but you can always unmute it to speak up. And if you have a question, you could either try that hold up your hand button, although since I can see all the participants right now, but if we had more, I maybe couldn't. So you could also type in the chat box, I have a question, and then as soon as I finish the thought I'm on, I'll call on you. Anyway, so what our plan today is to cover the overall context of lobbying as a charitable activity. One of the things I really enjoy about teaching this is there is way too much belief out there that you'll hear at cocktail parties or whatever that quote-unquote nonprofits can't do lobbying. And what I'll explain to you as we go through the history of how we got to where we are in the law is nothing could be further from the truth. If anything, the law encourages charities, by which I mean 501c3s, to speak up and do lobbying. So I'm going to explain to you some of the main cases and legislative history so that you'll come away understanding how true that is. Then we're going to talk about the two primary branches within how public charities have their lobbying measured or evaluated, and those are electing and non-electing charities. And at the end of explaining the differences between the two, I'll explain to you why experts recommend you make the election if you're doing much of any public policy advocacy. You know, an occasional letter expressing an opinion on a bill maybe doesn't require an election, but if you want to be at all active in the issue campaign mode, you will definitely want to choose the election, unless your budget's over $20 million. But I don't think there's probably too many of you at that size. Then we're going to get into the 501h lobbying expenditure, which is the election, the details of it. We'll spend a fair amount of time talking about the calculation of the allowances and the differences between direct and grassroots lobbying, a little bit of time on how you calculate the expenditures, and then what the reporting looks like on Form 990. And then at the end of the show, I'll give you a quick outline of what next week's program looks like. So, and there's going to be plenty of time, so don't, as I say, don't worry about questions. And one of my patterns is to talk fast, so sometimes I try and talk fast but leave gaps between sentences. So as I said in the beginning part about what we're going to cover, lobbying is clearly a charitable activity. Sometimes when I run into groups that have a C3 and a C4 or have worked in that context, they refer to lobbying activity as C4 activity. That's not true. Lobbying is a perfectly bona fide charitable activity. And the way the history has come down on this is that in 1930, there was a Supreme Court case called Slee versus the Commissioner of Internal Revenue. And Slee was the name for a birth control league of some sort, and this had nothing to do with the abortion wars. It was pure family planning, avoid overpopulation, encouraging people to have not too many kids. And it was all public education and charitable work. And there was some kind of legislation in Congress, and the organization commented on it, and the IRS stripped their tax exemption because in those days, lobbying was prohibited for charities. And the Supreme Court case, when you read it, it reads in a very kind of pained way where the judges say, well, you know, nobody has any doubt that these people are completely charitable. There's no suggestion here that lobbying is any huge part of their activity at all. But the laws are the law, and we don't write it, we enforce it, and they lose their exemption. So they backed up the IRS in stripping it. In response to that, in Congress, in 1934, added the no substantial part test to Section 501c3. And in just a couple of slides, I'm actually going to show you all of Section 501c3, so you'll see exactly what that means. And also because I think it's interesting how short C3 really is. Still, though, after 1934, nobody really knew what no substantial part meant. They were afraid to go there. It was, like everything else in tax law, it was about facts and circumstances. And for so many years, it had been the rule that you weren't supposed to lobby at all, that everybody was afraid to do it. There were a couple of cases that talked about, is 5% of your spending substantial? And the problem is that the no substantial part test isn't just about money. It's also about outcome, volunteer effort, any number of other variables. So going further, in 1976, Congress wrote Sections 501H and 4911. They basically dovetail. They're kind of a piece. 501H is really short, but sends you over to 4911 for the details, which is the part that some of you probably understand from friends of yours, where you come to hear that, you know, we can spend 20% on lobbying. You'll see in a minute where that number comes from. But it's an expenditure test. It has a lot of virtues because it's not facts and circumstances. It's a little more clearly defined than that. And still, even so, after 1976, charities were shy of doing it. They were afraid that raising their hand and making the election would be an audit flag, that it would send the IRS after them. And even though the code, the Internal Revenue Code that Congress had passed, had defined it, there were still a lot of words within the code that weren't fully defined. And it wasn't until 1990 that the IRS finally adopted complete regulations defining all these words. And that's what a lot of what I'm going to be teaching you today is at the level of regulations. And even then, the way they defined it was they defined lobbying wonderfully narrowly. In other words, it cut in our favor by characterizing many activities that you might think are lobbying are really public education, because unless they meet certain criteria, they're not lobbying, even though, yes, they're clearly, obviously designed to influence legislation. So even the thrust, when you think about the rules, you'll realize that the upshot is they want charities to be involved in public policy. I mean, clearly, if you're going to address hunger, you want the food banks to speak up. Or if you're going to address water quality, you want the groups that are working with rivers to speak up. And so the entire thrust of this area of public policy is to say to do it. What's been fascinating, and I've been working in this area since 1978, so basically since this whole 501H thing got started, most of the experts expected virtually every public policy advocacy type organization to make the election. And in fact, something like 6% of them have. So there are press clippings and things in my files about everyone scratching their heads about why organizations have been so shy about making this election. That's basically where we are today. So this is 501c3 that I promised I was going to show you as part of this context and history. This is the entire 501c3. So the first thing I like to laugh about is how much work tax lawyers can make out of this. I worked for 8 years for a law firm as a paralegal, and it's just amazing how much you can take all the words in one paragraph and spin it out in phenomenally complicated things. So the purpose of the color and bolds and stuff here is to basically parse 501c3 so you'll see it in different pieces. And just to run through it real quick, the first phrase, corporations and any community trust fund or foundation, that basically means any sort of organization. And it tells you one other side note here. A lot of people think the word foundation means something. It doesn't. The word private foundation means something. And a private foundation is a 501c3, and the rules I'm talking about today do not apply to private foundations. They're in a separate rule. So today, when I've been saying 501c3, I mean public charities. Then the organized and operated exclusively for can be very important in various areas of tax law. in our case, for what we're discussing today, it's not terribly important. And then the key, if you were to ask me what is 501c3 at a cocktail party, I'd say religious, charitable, scientific, or educational, those bold letters. But as you can see, it also includes testing for public safety, literary, and then you can see where the lobbyists get in there, to foster national or international amateur sports competition, parentheses, but only if no part of its activities involve the provision of athletic facilities or equipment, end parentheses. And so in that one, this local sports, you have to pitch as a health kind of thing rather than as amateur sports, because it literally means national, international, or feeding up to it. Or for the prevention of cruelty to children or animals, and that one I chuckle about because they seem to elevate animals to the level of children. It's kind of like PETA wrote that phrase. And then the next red section is no sharing of profit is what it means, no part of the net earnings of which inures to the benefit of any private shareholder or individual. That's why there's all this focus on not overpaying the boss and having fair transactions with board members. And the blue part is what we're talking about today, no substantial part of the activities of which is carrying on propaganda or otherwise attempting to influence legislation. Now, that was added in 1934. And then the parentheses, except as otherwise provided in subsection H, was added in 1976. Some of you were probably pretty young, and 76 sounds like a long time ago, but it was a year before I finished college, so it seems like fairly recent law to me. And then it says, and which, and the last red phrase is the prohibition on political campaign activities for candidates. And that leads us to a couple of important concepts. On this slide, it's the one I'm thinking of right now is the bottom point, where the last two. Lobbying is allowed, even encouraged, and candidate electioneering is prohibited. The most dangerous message in this field is if somebody says, oh, all that lobbying and political stuff is kind of dangerous and you shouldn't do very much of it. That's the wrong answer. Candidate electioneering, you're not supposed to do any of it. And in theory, it's a bright line test, and if you spend 1 cent on it, you lose your C3 status. In practice, I got to say, the IRS has been somewhat toothless, in my opinion, and we haven't seen too many revocations except for really gross violations. But lobbying, again, back to beat my same drum, is encouraged and even is allowed and even encouraged. And lobbying, so now we're starting to zero in on what does it mean. It means work on specific legislative proposals. Now that phrase is that's a term of art, and meaning that comes right out of the law. It becomes lobbying at some point before there's an actual bill number, but you can talk about the need for legislation to solve a broad social problem without it being lobbying. So you could say not enough is being done to manage stormwater, and we need something done. And you could scream and holler at the top of your lungs and tell everybody to contact their legislature about that. That is not lobbying, because there's a whole lot of different ways you could approach the problem of what to do about stormwater. The second thing about the definition is that it does include work on ballot measures, initiatives, and referenda, even though those feel like political campaign elections, just like for candidates, because everyone's going to the polls to vote. But the notion there is, in that case, the public is sitting as the legislature, and so working with them counts as lobbying. So any questions so far? I see from the things written, I assume we will make the slides available, and we also do save a whole, oh yeah, that's Catherine answers it there, we make a whole recording available. Any questions on the stuff I've said so far? Has anything surprised anyone? Mute buttons. Someone break the ice, ask me something. No? Hope my phone's still working. Catherine, can you hear me?
Yep, I can hear you.
Okay. So now we're going to talk about public charity lobbying in general terms. There are two tests. If you do nothing, you're under the no substantial part test, which, like most things in tax law, comes down to the facts and circumstances. And that means they'll consider anything. They'll consider definitely how much you've spent on it, but they'll also consider maybe what are the posters on your wall if they come visit. They might go ask the public on the street, what's this group known for? They might read the newspaper. They might look at the impact you've had. They might look at your board meeting minutes and see what you've been talking about. They might, it's just who knows what they're going to look at, and that's one of the problems with the no substantial part test. Or you can take action and make the election and be under the 501H test, which is an expenditure test. It ignores volunteer work. It's all about the money. Therefore, it's a lot easier to control the records because it's about the same old kind of cost accounting and timesheets, sort of like grant tracking is. And the definition of lobbying also varies depending on which of the two tests. Now, when I say that, frankly, we're not entirely sure it varies because we have a good, clear definition of what is lobbying if you're under the expenditure test, and we do not have as clear a definition if you're under the no substantial part test. So, you know, that line about we're working on a broad social problem, not a specific legislative proposal, well, that might not work as well in the no substantial part test. So the definition we'll see in a minute, we're going to mostly be focusing today on the definitions for electing charities. So what does the election mean? It means you file a tax form called 5768. We're going to see it in a second. It's a very simple form. And that form, you file it one time. It takes effect at the beginning of the year in which you file it. You can use the same form to revoke the election if you wish. And if so, the revocation takes effect at the beginning of the following year. And in a second, I'll give you the one reason I know of why a group might consider revoking if it gets really huge at the level of, say, Trust for Public Land or the Nature Conservancy. And almost all public charities are eligible to make this election. There's some exceptions. Churches aren't. There's an elaborate type of thing called a 509A3 that supports a certain C4, 5, or 6 organization, and 509A4 testing for public safety. Charities can't do it. But the upshot is I'm willing to guess that everybody on this call, if you work for a 501c3 and it's not a church, is eligible to make this election. This is another way of looking at the differences between electing and non-electing charities. So how do you become an electing charity? By filing that form. How do you become non-electing? Don't do anything. What's your lobbying limit? If you're an electing charity, you have an allowance, and it's based on your expenditures, and it's fairly objective. If you're a non-electing charity, the limit is substantiality, whatever that means. Probably means something in the realm of 5%. And it's based on facts and circumstances, and it could be, and sort of is by definition, subjective. Reporting on the 990, for electing charities, you report the total you spent on grassroots lobbying and the total you spent on all lobbying, but you don't tie it in with your line items. You don't have to, it's not on the program admin fundraising page. You don't have to integrate it with anything else. It's kind of an afterthought. It's supported by work papers in your file if they want to come ask. For non-electing charities, you report more detail, and late in this session I'm going to show you what these two sections of the tax form look like. But you report a certain amount of dollars by line item and a certain amount of yes-no questions, like what types of lobbying activity you did, and if there's any types they didn't ask about that you did, you have to attach a detailed narrative. And then what are the consequences of doing too much lobbying? For an electing charity, if you spend more than your allowance in 1 year, you pay a tax on that extra. If you blow your allowance for a 4-year period, this is any given rolling 4-year period, if you blow your allowance by more than 150%, then you face loss of your C3 status. For a non-electing charity, if you lobby more than substantial in any 1 year, you face revocation of your C3. So I think you can already see the construction of the answer to the question that one of the initial slides posed about why do experts recommend making the election if you're going to be doing any of it. So this is that slide. The consensus is that unless your budget is way over $20 million, in a second I'll explain why that is, and even so I'd get some advice first, that you would rather make the election. And the upshot is it's because It's an expenditure test with clearer definitions. You don't face any real serious downside risk except on a 4-year basis, meaning if you kind of got out of control in 1 year, you got time to fix it. Well, you got time to fix it as long as you've been an electing charity for a while. If you've only been electing for 1 year, your 4-year test is 1 year long. So you kind of build up, you save up your allowance in a way. The record-keeping complexity, it's true that if you do an electing charity, you've got to learn the difference between direct and grassroots lobbying, and you kind of keep some totals on that. But it is just total amount spent, calculation somewhere on a work paper, compared to having to integrate that in some manner with line items and basically set up a cost center in your books, because you're going to have to say what the dollar figure was for certain things. You could probably do that with a work paper still, because it's still not exactly integrated with the rest of it, plus various yes-no questions on what you actually did. And then there's the reporting is it's neither here nor there. You fill out different parts of Schedule C depending on your status. That's not so much in favor of the reason to elect. And just so you all know, the IRS has actually put in writing that making the election is not an audit flag. So there was a lot of concern, of course. Everybody, as I said, thought, well, if we lobby, they're just going to come after us if we say we're lobbying. And they did make a mistake a few years ago. They had they had an audit program that targeted groups that had reported lobbying, and they over-selected electing charities. News spread like wildfire through what we'd call the EO bar, meaning the exempt organization lawyers. And they immediately called a meeting with the IRS. At this time, the head of this division of the IRS was a guy named Steve Miller, who was, I was really surprised at different conferences. He was spoken about with open derision as being kind of stupid. And people are usually pretty cautious around that, how they talk about IRS officials. So they called this meeting with Steve Miller and his lieutenants, and the IRS would not disclose how they had chosen the groups they had chosen for audit, because that's always their secret sauce on how they make decisions on who to audit. They never reveal their methodology. But the people that I talked to, lawyers that were in the room at the meeting, had concluded that what the IRS had chosen was a criteria of kind of like anyone reporting more than $25,000 of lobbying activity or something. And that was a stupid way to set up the criteria, because based on this whole thrust of the law, anyone that's going to do that much lobbying and report it is going to be an electing charity, because it's the right way to go. If you wanted to find the non-compliance groups, you'd choose groups working in public policy who are reporting zero lobbying or have not made the election. They're the ones hiding it and sticking their head in the sand. So they kind of explained all this to IRS, told them that they were screwing up this whole effort to get charities to elect and lobby the way they're being encouraged to. So IRS agreed to stop the program, to not start the audits that they had not already started, to finish the ones they had started, and to not go any further with it. And they didn't admit any wrongdoing, but it was pretty clear they'd made a huge mistake. So that, I must say, they even, and this was after they had put it in writing that it was not an audit flag. So it isn't per se an audit flag, but they had screwed up in that case. And you know, there's no assurances that what they're going to choose. This year they're looking at different factors on choosing audit targets. Lobbying is not, for C3s, is not on their list this year. But there are other things, executive pay disproportionately high compared to program expenses and other sorts of criteria like that. And they're starting to be a little more transparent about some of their criteria. But so it's not an audit flag, but clearly lobbying is a little bit of an edgy activity. On the other hand, you know, if we want to save the rivers, I'm all for a whole range of advocacy activity, some of which is lobbying and some isn't. So why do we consider revocation over $20 million? It's because when you see the math here on these allowances, you'll find out that under the election, no matter how big you are, your maximum allowance for total lobbying is $1 million. So if you're a $100 million organization, 3% of your budget would only be $3 million. And so if it was also 3% of your activity and you didn't cause an entire upheaval in the world in terms of outcome, it'd be pretty safe to guess that that is insubstantial. The lawyers have asked the IRS whether they're willing to put in writing that $1 million, that they won't somehow someday say to a group like this $100 million example, that by definition, anything over $1 million is substantial, that it isn't even a question of proportion to your size. It's just substantial in and of itself. And they have not put it in writing, but they have verbally said in informal meetings to people that I've talked to firsthand or secondhand, I guess that makes it, that they do not consider that anything over $1 million is just by definition substantial for a giant organization. So the ones that are that big, as I say, like Trust for Public Land and Nature Conservancy, I believe have either revoked or seriously considered revoking their elections over time. Otherwise, there's only one obscure case in my entire career that I've run into of somebody who made the decision to not make the election, who was doing lobbying, and I think she had a reasonably good reason for making that decision. So here's the form you make the election with. This is the entire form and the instructions. So when I say it's a simple form, I mean it. It's basically what's your name and number and address, and you're either making the election on line 1, in which you'd fill in the beginning date of your current year, or you're using this form to revoke the election because you've suddenly gotten Bill Gates to give you $100 million and a year, and you're going to revoke the election, and so then you would put applying to our, let's see, I'll revoke it. It would be the end of next year, I think, is what you'd fill in that date. I can't talk and read well at the same time. And then you either check the box for election or revocation, sort of a double check that you filled in line 1 or 2 properly. Sign it, mail it in. So one of the big questions comes up a lot of times for groups: how do I know whether we ever filed this thing? Well, it's a good question. One answer is you can call Exempt Organization Customer Service, EO Customer Service, at the IRS, and I'm going to give you that phone number here, so if you got a pen, you can get a hold of it. It's 1-877-829-5500. And that's a phone number that opens at 7 in the morning in Cincinnati, Ohio. So, and you can be on hold sometimes for a long time, and there's about must be a 5 or 10 minute, it feels like it's probably only 2 minutes, recording at the beginning where they say, this is not about your 1040, this is not about this is not about that, this is not about this is not about that, and okay, if you're calling about exempt organization matters, please stay on hold. Thank you, Catherine. Oh, wait, no, that's the wrong number, 877-829-5500, not 5510 at the end there. You need someone who is an officer of your organization. If you get a stickly person at EO Customer Service, they'll insist on talking to an officer. I don't know if I should talk this way or not. I'm not a CPA or a lawyer, so one of my benefits is I haven't taken any oaths. So it should be an officer or somebody who's willing to say they are. It's not like they're going to look it up. So they can tell you whether you filed it. I've heard from CPAs that if you e-file your 990 and you fill out the wrong part of the Schedule C compared to your status, it'll bounce. And they focused this year in the instructions, they emphasized that electing charities should all be filling out the electing charity part of Schedule C. Any questions so far? Did we mention the raffle prize for the person that asks the first question? So, anything out there? No surprises? So, talking about this election, and as I say, all the rest of the things I'm going to cover today are going to be about the election and next week. There's 3 steps. One is to calculate your allowances, and in tax talk, if you happen to look up instructions or anything, the allowance is actually referred to as the lobbying non-taxable amount, meaning once you go over the allowance, you pay an excise tax. And then the job is to identify your lobbying activities, and that, of course, is a little more difficult in practice than one would hope. Life is blurrier. Sometimes you don't know whether something's going to become a lobbying activity, whether it's going to become a specific legislative proposal or not. There's a variety of rules about it. Sometimes it works well to have all your program staff identify their activities on a timesheet. Sometimes it works better to keep it off the timesheet and create a sort of incident report where program staff that might be doing lobbying briefly describe whatever it was they were doing and turn it into finance and let the financial person keep track of what is and what is not lobbying. and then do the math later on how much were we paying this person, how many hours did they say they spent, that kind of stuff. Because figuring out how to get the organization to learn this stuff can be difficult. It's a little bit like computer knowledge. It tends to spread a little bit virally among work teams. And then the last step would be to calculate your lobbying expenditures. And so it would be that staff time involved with the effort and whatever the cost of that was, plus benefits. Any specific direct expenses, that might be a travel expense to your state legislature or your county seat or something like that. It might be a particular printed material. It might be an advertising campaign. It could be some sort of an alert type call to action. It could be any number. You could be paying a lobbyist. So direct expenses like that. And then some reasonable share of your overhead or shared operating costs associated with the staff time or however else you calculate your overhead. They're not really super directive in the regulations about how to do this. It really does revolve around reasonable share. So I'm going to focus today mostly on these first two sub-bullets, on the calculating of the allowances and on the differences between the two activities. And so here is the calculation of the allowance. This is where the word comes to you when people say you can spend 20% on lobbying. First of all, one thing that's a little bit confusing is there's two kinds of lobbying, grassroots and direct. But the two allowances are total and grassroots. And sometimes that, when you're first working with this, that's a little bit complicated in a way. So the first thing you do is you calculate your total allowance, and it's based on a percentage of exempt purpose expenditures, which is in quotes there because I'm going to tell you in a second what the definition of it is. For most of you, it's going to mean all your expenses. And that is a sliding scale. And this is an annual allowance. It's 20% of your first $500,000, 15% of your next $500,000, 10% of the next $500,000, and 5% of everything over that, with a maximum allowance of $1 million, which occurs at about $17 million of exempt purpose expenditures. The grassroots allowance is 25% of the total allowance. Maybe I'll show you the exempt purpose expenditures definition slide, and then I might just go on strike until I get a question. Exempt purpose expenditures definition. So, as I say, for most of you, it's likely to be all of your expenses. It doesn't include, and this is one rule that annoys me, the costs of a separate fundraising unit, which they define as 2 or more staff dedicated entirely to fundraising. What's annoying about this is that you can be a pretty small organization and have 2 development staff. And all I would do there is just be clear that in most organizations, everybody does a little bit of various things, not just fundraising, and I would not declare them as a separate fundraising unit. What they're thinking of when they wrote this rule is that, like in Washington, D.C., the AARP has an entire office building that does nothing but their direct mail operation. So it really is a separate fundraising unit. It's almost a business unit of itself, and I wouldn't doubt if they don't have a subsidiary that does that for other organizations or something and uses the same staff. So, but in any case, depending on your facts, if you've got a really, truly separate fundraising unit, you might have to drop those expenses out of your total expenses to get to this exempt purpose expenditures. The next one you might have, and this is payments to fundraising council or professional fundraisers. And this term, the trend in the last few years is to defining this very broadly. So you can pay a contractor, $1,000 to just help you write a couple of grants or help you do some research on foundation prospects or something, or to identify local donors that are promising, and that would be excluded from your exempt purpose expenditures. So essentially, just kick all your fundraising consultants out of the formula to calculate exempt purpose expenditures. The one comment I'd have on that, and this is broader than just this lobbying basis, is grant writers do a lot of program planning. So a lot of people approach a grant writer and say, we need help writing a grant. And really what they need help doing is formulating a program which can be articulated and somebody might be willing to fund. In other words, they've got some good good ideas. They're fueled with fire in their heart, but they haven't really framed it as any sort of strategic thing with objectives and things they can achieve and stuff. So I think hard about sometimes if you think you're paying somebody to write grants, you may be paying them to do some program planning, and you might want to even split how you're paying them and for what. But in any case, this part drops out of your expenses. Then this next one would be obvious to anyone who does a lot of accounting, but you don't get to count capital expenditures. That means buying something worth thousands of dollars like a server that you're going to actually expense over a number of years. But the straight line depreciation expense is okay. Not accelerated depreciation, but very few nonprofits fool around with accelerated depreciation because there's no reason to do it. Straight line just means, over 3 years or 36 months or 5 years or 60 months or whatever. So the depreciation expense costs, but counts, but not the purchase cost in case you're treating that as an expense during the year until the end of the year when you do your fancy financial statements. Investment management expenses don't count. Again, for most people, if you're getting your portfolio, the investment manager has taken their bite right out of the account, and you're probably simply recording less investment income in the first place. But if you are booking investment management expense, you drop that out of your exempt purpose expenditures. Certain excise taxes, I don't even recall right offhand which ones these are, but they're probably things like taxes you might have paid on excess lobbying for past years or something like that. Wouldn't count. They don't help pump up your allowance. And then there are certain kinds of transfers, meaning grants, that people make that are designed to circumvent these rules. In other words, if you were to make a lobbying grant to a C4, you don't get to count that as part of your exempt purpose expenditures. In fact, you probably have to count it as part of your lobbying expenses. But it's possible that you make a grant to a C4 without calling it a lobbying grant. But if it isn't a controlled grant, the way these rules work is you don't get to count it. And then there's certain affiliated group rules that are anti-abuse when we get talking about the details of the definitions. I think next week we'll talk about with the affiliated groups. Once these lobbying rules all took effect, there was some fear that large charities would break themselves into smaller pieces in order to have a larger allowance. That was when everybody expected there to be a giant rush to this, but instead, as I say, nobody's done it. So there must be some question or thought here on these two slides with this allowance and this definition.
Hi, Terry. This is Kelly Mayer.
Hi, Kelly.
Hi. I do have a question. It's actually about the previous slide.
Okay.
You had, right here on the sliding scale, 20% of the first 50K or 500K. In a previous slide, and maybe I'm just misunderstanding, there was a definition there that said something about that if 3% over your organizational budget is what you're allowed to spend.
That was in the discussion about when you might consider not having this election.
Okay.
So if you were giant, if you were a $100 million organization, not making the election, but you spent 3% on lobbying, that would be $3 million. So it would be triple what you could do, because even a $100 million organization has $1 million lobbying allowance under 501H. It just stops at $1 million. So the notion is that 3% is by all accounts, that factor is itself non-substantial. So as long as it wasn't contradicted by a huge amount of volunteer effort or a $1 million on March scale of impact that might not be well represented by expenditure, then the $100 million organization would probably be safe. So that's where that 3% number came.
Okay, so is it the recommendation then if you find yourself, if your organization is spending 3% or over 3% on lobbying purposes, then they should elect for the form?
No, I would not. No, I did not mean to draw that inference. One of the cases on that line that came up between 1934 and 1976 was the season good case, and that one revolved around 5%. But the problem with the non-electing charity test is it is not just an expenditure test. So I would say that it's probably safe to understand that spending more than 5% would be risky, but spending is not the only indicator.
I see.
For a non-electing charity, because they will look also at volunteer effort, impact, and so on, potentially. And so you could spend only 3% but have a giant impact and mobilize a zillion volunteers and suddenly be substantially lobbying, even though the number isn't substantial, because the no substantial part test is not an expenditure test.
Okay, great. Thank you.
And I realize, I think my next slide, yes, I forgot to, so here's a slide that applies the math to an organization with 1,760,000 in exempt purpose expenditures, just in case it was fuzzy in anyone's mind how when you work with it a while, this 100 plus 75 plus 50 and thing, you can almost do it in your head. And of course, at the beginning of a year, when you're planning an issue campaign, you don't exactly know what your exempt purpose expenditures are going to be, but it's easy enough to budget somewhat cautiously and choose a number you consider safe. Any other questions out there? There must be some. That was a good one.
Do I win the raffle?
Yes.
Thank you, Terry.
We'll mail you information about that prize. Catherine will get right on that.
On it.
So come on, somebody else must have a question. I think you're all sleeping. If you were CPAs, I think you were getting free CPE. No? Okay, well, so here's the example math of calculating the allowance. If you're ever curious where to find this formula again, and you don't want to dig up the slideshow, on the schedule C of the 990, they actually restate the formula right there on the face of the form, this percent of 500,000, percent of 500,000. So now we need to get into this question of direct and grassroots lobbying. I have two different slides designed to kind of explain the differences. This one tries to use color to parse the phrases and show you which things are similar between them and different. So direct lobbying is communicating with a legislator. Grassroots lobbying is communicating with the public. Both of them are about a specific legislative proposal, which I mentioned earlier it's more specific than a broad social problem, but it will occur sometime before a bill number. So if you go into the legislature and you say, would you be willing to support a bill that gave a incentive tax credit to property developers if they install permeable pavement to lessen parking lot runoff? That's pretty specific, because if you went in there and said, we need something done to encourage permeable pavement, that's probably a broad social problem. You're getting kind of specific there, but again, you can encourage it by law, by requirement, by zoning, by tax credits, by any number of other ways of doing it. So I think you're still pretty safe at that point. But when you start horse trading about the exact details, you're into the specific legislative proposal territory. Expressing a view is true in both cases, although in general, they're not going to let you pretend you didn't have a view, because they'll be able to tell by the name of your organization what you generally do and who you were speaking to, probably what your view is, even if you didn't come right out and say it. And with direct lobbying, with the intention to influence legislation, and then grassroots lobbying, it has to also have a call to action, or it is not grassroots lobbying. So you can talk to the public, and if you stop short of a call to action, you could spend $1 zillion on a billboard campaign that said, this bill before the state Senate is a terrible, terrible bill. And if that's all you said, that's public education. It's not lobbying, because there is no call to action. That's this is part of what I mean about when they defined the rules, they defined them narrowly, which is to say in a manner to encourage this lobbying. So here's the direct and grassroots lobbying lined up together so that you can see them. They're both an expenditure, because remember, we're talking about the 501H election here, which is an expenditure test. It's not an effort test. It's not an impact test. It's expenditure. About a communication. Direct lobbying is with the legislator, grassroots lobbying with the general public. Now, understand that in the case of ballot measures and initiatives, the public is the legislator. And there are also cases where if you're, in general, working with the executive branch is not lobbying, but if you're in there to meet with the governor's office to try and persuade the governor to endorse a bill, then in that case, the governor's staff counts as a legislator. So there are certain cases when executive branch staff can pull you you into lobbying if you're in there about a specific legislative proposal. Both of them are expresses of view about a legislative proposal, and then grassroots lobbying has to have a call to action, and there's two different types of that, which are direct and indirect, and next week we'll see how important those can be. When you're communicating with your own donor list, you get some real free passes with indirect calls to action. You also get a free pass on something called nonpartisan analysis, study, and research if you stop at an indirect call to action. And so these are the way calls to action look. And part of what this is saying is that you can't pretend you can't have a tear-off prepaid postcard to send the legislator and claim it wasn't a call to action just because you didn't tell someone to fill out the postcard. So either if the communication says, so contact your legislator, or it provides the legislator contact information like a list of their phone numbers or email addresses or whatever, or it provides a response mechanism like a tear-off and mail-in postcard. Any of those are a direct call to action. An indirect call to action is a mere list of key allied, opposed, or undecided legislators on a specific legislative proposal. So if you said, this bill is before the Energy Committee and the members of the Energy Committee are so and so, that's an indirect call to action. In general, that still makes it grassroots lobbying, but we're going to see some special passes that rely, if you stop it at an indirect call to action, that help treat the expenditure in the most favorable fashion. So that's the definitional part on the direct versus grassroots, and I'm thinking when we have time at the end, a chunk of blank time for questions where we're either going to end a couple minutes early or some of you are going to come up with some questions that we might have some examples of trying to guess what's direct and grassroots. You should know that fundamentally that's a legal advice question about what it is. So applying the law to a set of facts is the giving of legal advice. So you can either ask a lawyer, you're allowed to make the decision without asking a lawyer, but I have to be somewhat careful about answering a question about it is this or it is that. I have to go back to trying to explain what I know about the law so that you can figure out how to explain it. You then calculate your lobbying expenditures, and that would start with direct costs, and I mentioned that before. It's things like travel, publications, lobbyist fees, mailing costs, media. And then you may have some mixed purpose activities. For example, you might have gone to your state capital and visited a foundation and done some lobbying. And so that trip might be 50-50 split. So it's not allocated in the way of an overhead cost, but it may be allocated between lobbying and non-lobbying 50-50. And again, whether you're trying to capture this, I recommend not capturing it in your chart of accounts with a cost center or anything, unless you're really pushing your allowance right up to the max and you've got to monitor it every second. I think a kind of off-the-books incident reporting basis is a much better way to do it, because if anything, I see our side over-report lobbying. The staff thinks everything is lobbying that has anything to do with legislation, and the thrust of this law is very more specific than that. And then the staff cost, and again, timesheets or incident reports. And then some fair proportionate share of overhead or shared operating costs based on the way you do your other things. And the only real law is that it has to be a fair and reasonable method. Any questions about this cost allocation stuff? This is one of these topics that I've been doing for so long, because I'm a finance person at heart, that cost allocation seems simple to me, and I realize that the concepts are not always as simple to other people. Lunch today, okay. So this is the part of this is Form 990 Schedule C, Part 2A. This is the part that electing charities fill out. And so first of all, we have two columns here. For you, and then if you're part of an affiliated group. And an affiliated group is, as I say, it's an anti-abuse rule. I don't remember the test offhand about when you're closely affiliated enough. The upshot is that if several charities are sufficiently tied together, it probably has to do with board interlock or the Articles of Incorporation giving one charity the power to veto or the positions of the other charity, or to tell it to take positions. You have to roll them together and calculate a single lobbying allowance, and roll their lobbying expenditures together and calculate a single expenditure. The notion was that a $2 million organization could divide itself into two $1 million organizations and have a bigger allowance. So it's an anti-abuse thing. So far, I have never in my life worked with a tax return that had anything in this second column for affiliated group totals. But it is possible. You could have a multi-chapter organization in one state where you somehow all were reporting up to one board, or sufficiently affiliated that you were under one allowance. So then, working our way down this top section, it basically asks you, how much did you spend on grassroots lobbying, how much did you spend on direct lobbying, and then how much did you spend on total lobbying? What are all your other exempt purpose expenditures? And then, then add C and D together to get your total exempt purpose expenditures. And then line F is your total lobbying allowance. And I told you on the face of the form was the formula right here. So this is the somewhat cumbersome way of writing it now that I look closely at it. This is the 20% of the first 500,000 and 15% of the next 500,000 type math, but it's done in tax terms like 175,000 plus 10% of the excess over, blah, blah, blah. It gets to the same point. Then line G is the grassroots allowance, which is 25% of the total allowance up above. And then basically H and I are asking you the question of whether or not you spent more than your allowance this year. And line J says, if you did, go fill out this other form and pay the tax. I should tell you that I worked with one environmental organization in Alaska that did spend more than its allowance consciously in 2 different years, and it did pay the tax, and it did not get audited. So it's 25% tax, but some people view it as just a cost of doing business, and in some cases where your legislature meets every other year, you may find yourself wanting to go over in 1 year. This section of the page down here below is the one where you fill out how much your allowance was this is a 2010 form, so how much your allowance was this year and how much you spent this year. And you do the same thing for the last 3 years, and then you run the 4-year total, and then you do the same thing on the grassroots lobbying. And this is the one where if your spending is more than 150% of your allowance on that 4-year basis, you're going to be in some serious trouble. Next week, when we talk about some advanced strategies, one of the nice things about this 50% thing is that this is one other reason why, if you're an electing charity, you can really max out your allowance without worrying, because you're kind of saving that 50% as a cushion. If they come in and audit you and they decide that you lowballed how much you spent, you might end up owing some tax, but you're not going to lose your license. So it's a pretty favorable test. Any questions on this document we're looking at? Can you all see it? I'm curious. Is there anyone out there who cannot see this on their, that isn't on the world's tiniest laptop or a smartphone or something? Curious how it would look. I use a giant screen at home. Good. I'm hoping that means you're all actually awake and can see it. This is the form that the non-electing charities fill out, and this is the one I was arguing that in some ways is harder. So even though they don't have to worry about grassroots and direct, they have to answer these questions. So first there's these yes-no questions that want to know, did you use volunteers? Did you advertise in the media? Did you paid your own staff or management, mailings to members, legislators, the public, publications, grants, direct contact with legislators or other government officials, rallies, demonstrations, seminars, conventions, speeches, lectures, or any other similar means? Other activities, and if so, describe them over in the narrative part. And then they want the dollars here that you spent on each of those. And since these aren't exactly like line items in a financial statement, this could be a chunk of work because they're trying to figure out, you know, like what you spent on a rally. You may or may not be capturing all the costs of a rally as an item. Now, a good faith estimate is not going to hurt. So if you're non-electing and you got to fill this out, you know, you're not going to jail if your general ledger isn't tracking on these details. You just sit down and do your best effort to kind of make a fair guess as to what things cost. I worked with a group once that was getting audited, and they hadn't reported any lobbying, and we went back and just reconstructed things, and the guy was fine with the estimate. They'd been, in their case, they'd been advocating dropping the trade embargo on Cuba and had been reporting zero lobbying. But it was basically a staff person sending out a bunch of email alerts that were cost-free, so it was really just the cost of the staff person and some things in their newsletter. And so then this bottom section is basically saying you'd be silly to write yes. Line 2A, did you lobby so much that you're no longer a C3? So if you check yes, it's like signing your own death warrant. And then the thing is that they don't have to revoke you if you spend more than substantial as a non-electing charity. There's a penalty under Section 4912. I really can't imagine anyone deciding that they were going to calculate their own tax, because the line of what is substantial is not defined, so they would never know what to calculate it on. In any case, this is the tax form here that is why I think is another reason why being a non-electing charity is a pain, because even though you don't have to do direct and grassroots calculations, you have to accurately report on all this other stuff. So next week what we're going to talk about is the broad subject is advanced strategies for 501h electing charities. I'm going to talk a little bit about the funding realities, meaning what are the rules that the private foundations that give you money live under, and where are the electioneering edges when lobbying can suddenly become candidate electioneering if you're not careful. In the advanced strategies, the biggest focus is this area here, what is not lobbying and what is not grassroots lobbying. There's a lot of sort of exploitable loopholes that they wrote in there, I would say on purpose, again, to encourage lobbying. And then the aggressive advanced strategies is just different ideas I've come up with, partly to teach people how to think about 501h. So you have to say, why does that work? And then it might help you understand the workings of it more. So actually came in pretty close to the time here. Did I tell you about the prize for the second question?
There are 2 questions on chat, Terry.
Oh, good. I'm sorry. There you go. Talk more about separate fundraising unit. And the second one was cost of a legislative reception where both education and lobbying take place. Good questions. Okay. I'm going to do the second one first because the answer is a little bit clearer. I'm not sure that I've ever read a rule that's specific to that, but in a newsletter there's a rule that we'll talk about next week on the same specific subject. So let's say you have a 6-page or an 8-page newsletter, and the last half of the 8th page is a call to action, is a legislative alert to tell your members or the public to contact the legislature. If it's about some kind of stormwater runoff bill, and then page 2 is you're trying to have it be an educational page about this approach to stormwater runoff, or maybe even stormwater runoff overall as a problem, that same specific subject is going to cause you to count 1.5 pages of the 8 as lobbying, not just the half-page alert on the last page. So when you say a legislative reception, which is both education and lobbying, if the issues are completely different, so in other words, if it's education about ways volunteers can become involved in directly cleaning up rivers by pulling out old tires and volunteer day clean up the river, and it's also about lobbying about a particular bill before the legislature, and you're inviting, it's a legislative reception, I think you might have a reasonable shot at splitting that 50-50 between education and lobbying. Also, next week, I'm going to show you a chart that has in mind mailed communications. When you parse your list, it matters a lot whether you've sent the list to 85% or more members, which means donors, or 50% or more members, or less than 50% members, which is a communication with the public. And then the treatment matters a lot different, and there may be some ways to extrapolate those allowable splits based on who received that communication and apply that to a legislative reception. On the fundraising unit, John, what popped into your head about fundraising unit? Star 6 is your mute button. I see Jessica's question about 5768. Yes, I do. I do always recommend making the election. When I help an organization get its exemption, I file it with the exemption application if they're working with public policy at all. And the reason is because you save up your allowance. It's completely okay back on the electing tax form here. Down here in this bottom section, it is completely okay to report 000 lobbying and your allowance, and 000 actual lobbying, and you basically have saved up your allowance. So you can easily report zeros here. Here's our allowance, and no, we didn't go over, and it's absolutely okay. They do want you to report the 0 every year if you are an electing charity. There's no such thing as blank there. Probably his mute or sound isn't working. On the separate fundraising unit, I really honestly don't know that it's terribly well defined yet. I have not seen any rulings or cases, but I'm not a lawyer, so I don't read every little hot sheet that comes across. But I haven't seen a lot of development of that issue or a lot of discussion in workshops or anything like that. And I do subscribe to a few things. As I say, I'm pretty sure that their goal included a membership director or a development director. See, that's the thing, membership is a funny one. If you look at the way GAP considers fundraising, they think even trying to get volunteers is a fundraising effort. But I would think it's like community organizing. Getting people activated is a programmatic activity. And again, development directors, in the same way that a grant writer helps you do program development, a development director often helps harden up and tighten up vague program ideas so that they're actually fundable and they're not doing exclusively fundraising. So I think the way I would handle this if I had 2 or more development staff is the word development's kind of nice because it's a pretty broad word. It doesn't just mean fund development. It can also mean organizational development. And so in both those cases, I would, both for the program admin fundraising split and for the purpose of this, I would treat that person as kind of a mixed function, and I would not treat them as a separate fundraising unit. But that's partly because I hate the separate fundraising unit rule when it's applied to the small organizations that are my heart and soul. So I wouldn't personally exclude them. In all this stuff, of course, you're negotiating with your own CPA, but a lot of times they're looking for you to have an informed opinion about the position you're taking. So as long as you've thought about it, you know why you're taking the position you're taking, they're usually fine with it. Any other questions? Did I get those ones you had written?
Terry, I have a question.
Go ahead.
Can you explain a little bit more about the calculation for percentage of the overhead towards lobbying expenses? It just doesn't seem like it's relevant to lobbying activities.
It is if you spend staff time. All they're really saying there is that staff time, there's no such thing as staff time without the associated portion of rent or whatever.
Okay. So not only billing the staff time.
Right. And that's all they really say in the regs is don't try and pretend it's only staff time. We know there's some other costs in there, and you got to make some reasonable effort to give us a little share of those costs. And, if you don't have an elaborate overhead allocation system already in place, honestly, just sort of looking at your overall numbers and coming up with some reasonable ratio and attaching some extra costs, they're not going to hassle you about that as long as you put something in there for it.
Mm-hmm. I mean, if the only lobbying activities that really happen in the organization are traveling to the Capitol, then there really is no overhead expense on that because... Yes,
there is, because how do you spread your rent for other purposes? How do you decide, if I give you a restricted grant for your work on one particular topic, how do you decide how much rent you spent on that topic? Probably based on your staff time. So it's not just the fact that staff were traveling so they're not in the office, but they're not using the rent. That doesn't really count, because we usually divide things like rent and dial tone based on how our staff effort breaks down overall.
Okay.
So it's just only fair to give it some share of those things. And a big travel expedition off to the Capitol usually requires some preparation. You're usually doing some briefing papers or something ahead of time. So, they're not going to the upshot here is because it's not this isn't like political activity, so they're not really worried about it. But I do often see groups that you read their website and it's all about all sorts of legislative victories, and even their program service accomplishments on the 990 might allude to legislative victories, and then you read their numbers and they're reporting $242 of lobbying expense, and it kind of makes me roll my eyes because I know they're just afraid of the rules. So it's some sort of plausible amount for the amount of effort you're making, and you need to keep the work paper. So on audit, you have to be able to back it up. Well, I think we're at 11:06 now. I hope you're all planning to come next week and see part 2. So I'm not going to review most of this week. I got one slide next week, kind of like this week I had a slide that says, what are we going to do next week? Next week I have one slide that says, what did we do last week? That I'm going to kind of zip through, and then I think I bring up that one of those charts. I repeat it because it feeds right into one of the questions next week, but we'll explore more of these interesting kind of places where it applies. And thank you very much.
Thank you, everyone.